On today's episode, we will talk with one of the best mortgage brokers I've had the pleasure of working with. Most of us can't buy a home without a mortgage. We need a loan. But do you know there are so many myths and misconceptions about the home loan process? Well, today's show is appropriately titled Unraveling Mortgage Myths. And I've asked one of the best in the business to join us today to unravel the web of misconceptions dealing with loans. Barbara Martey has been my preferred loan partner for as long as I can remember. Let's get into the episode. Barbara, welcome to the show. Thank you so much for joining us today.
Thank you, Stella. I'm so excited to be here.
So, Barbara, explain to us what it is that a mortgage loan officer does.
Okay, well, a mortgage loan officer is kind of like a financial advisor. We go in and we investigate your credit, we investigate your income, we look at all your past history of debts that you might have had on your credit report, actually going back to age 2. But I mean, pretty much we're like I would say a financial investigator. We're someone that we're really your friend because we want any client that comes to me, I always tell them any information that you can give me to disclose any information would help with the real home buying process. Meaning that if you're able to disclose any information that you feel like that might not be important, maybe it's your income. Maybe you have your grandmother living with you and she's on disability and you're receiving that income because you're the payee. We need to know all of the information up front because the more information that we're able to find out about our client, the better we can help structure the loan, get it approved, and bring you to the closing table. So first, we're your friend, and then we're your financial investigator. But we're the good ones, okay?
Okay, very good. I love the fact that you are a mortgage broker as well as a loan officer, because as a broker, you are able to provide more options for my clients.
Yes.
Tell me more about that.
Okay, one is because we're a broker, we're able to get a lower rate. We have a lot of partnerships with our banks, so they're able to give us lower rates to give to our clients. A lot of times when you go into the bank, they're offering you a retail rate. Just like, for example, on the FHA, the rate today is 6.125, but I can get you 5.875. And then, yes, which is a lot lower rate than the retail rate in the banks. We're able to structure the loan. We're able to be more creative with the loans financing. We're able to offer non-QM loans. It's called verification of income loans. Maybe you have a problem with your income. You've been a nurse and now you've changed another career. We're able to structure that loan to help provide a program that would best fit that client's needs. And then the last bonus I have for you, Stella, is that because we have a partnership with a major lender in Michigan, they allow us to give our clients, because we have partnerships with them and partner bucks, they're called partner bonus bucks. They allow us to give each client that we obtain $1,500 to $1,800 money. I'm not talking about monopoly money. I'm talking about real money to you to either buy your rate down, or you can use the $1,500 to $1,800 to go towards a credit to your closing costs. And to really be honest, that's a game changer for me, because a lot of times when you have people that are coming to the closing table, they may be short on their closing costs or their cash to close, and then you working with a real estate agent and we all are working together to get this to a final close. So if I'm able to contribute an additional $1,500 to $1,800 to that client to help bring that cash to close down, that would be a game changer. And I'm able to do that, either that or lower the interest rate, whichever is beneficial for the client.
The number one most popular question that you get from your buyers, what is it?
What do they need to qualify for a loan? Well, it's a simple process. I always tell buyers preparation is very important, but really you don't need a whole lot to qualify. You just need your 2 years of income, whether you're self-employed or working. We need 2 years of current income, along with 2 years most recent bank statements. We need a copy of of course, your driver's license and social security card. And it also helps to have the 2 most recent pay stubs as well, and any kind of additional income that you might need to kind of help with more buying power, because the bigger the house, the more the income, the bigger the home.
Absolutely. And now the most popular question from buyers, do you need 20% down payment to buy a home?
Of course not. 20% helps. It helps eliminate the private mortgage insurance. And of course, we all know what private mortgage insurance is. It helps eliminate that extra $140 or $150 mortgage insurance payment every month. You know, that doesn't help the buyer, it's to help the lender in case they default in the future. So to eliminate private mortgage insurance, that would help to pay down the 20%, but of course not. You don't need 20% to qualify for a home. All you need is good credit. Some down payment would help, but you can actually qualify with zero down. We have USDA, we have VA loans, and we have, of course, we have 7 grant programs. And the grant programs that we have available are really nice and wonderful, Stella, because they're not income driven and they're not county restricted. A lot of the grant programs that they offer today to a lot of the home buyers that are in the Georgia or any state area, they're income driven, meaning that they have to make a certain type of income, or they're county restricted. And you know yourself, I mean, if you see a beautiful home in Gwinnett County and it's income restricted in that county, that might be a problem. So we offer 7 different grant programs that are not income restricted and they're not county restricted. So it's really a wonderful program.
That is wonderful. Absolutely, absolutely good to hear. And then, of course, the second most popular question, well, I've heard ever since I've been in real estate, what credit score do you need to qualify for a home loan? Does my credit score have to be perfect? We know it doesn't have to be perfect, but what's the qualifier?
Well, a 580 credit score is a good qualifying credit score to start with. If you, for some reason, are not able to obtain 580, we have it's called a credit builder, which is a rescoring program that helps increase your credit score anywhere from 5 to 150 points. But now to qualify, you will need a 580 to get what is called a desktop underwriter approval. That will help, but of course, you don't need to have but just a 580 credit score to qualify. We will help you every step of the way.
That's awesome. A lot of buyers are going to be happy to hear that.
Yes.
Now, speaking of qualifying, there's pre-qualification and then there's pre-approval.
Yes.
Please tell our audience what's the difference between the two.
Okay, well, a pre-qualification is kind of like an estimated approval. It allows us to go in and look at the client's income. We've verified their 2 years of income. We've verified their credit, and we've run what is called the desktop underwriter approval, which allows us to see all of the assets, the income, to get a good estimated amount of what they qualified for loan amount wise. Now, that is just a pre-qualification. Now, a pre-approval is what is called a final conditional approval. That's when we actually submit the loan to underwriting, and we have an underwriter go in and investigate all of their credit, their income, any type of information that would be not really seen on the surface. That is when we have a real conditional approval. Once that conditional approval is out of underwriting, then we are ready to go. We're ready to close. We get a final approval. We're ready to go to the closing table.
That's fantastic. So let's just give a quick run through of the application process. A buyer calls you, hey, I'm looking for a loan. Go.
Okay. Well, if you're looking for a loan, let's go ahead and get you qualified, John. Let's see what you qualify for. Let's go ahead and collect your income. We'll need 2 years of income. Either if you're self-employed, we'll need your 2 years tax returns, 2 most recent years. And if you're employed, that's fine. We just need your W-2s from the 2 most recent years. And then we'll, of course, need your 2 most recent pay stubs, 2 most recent bank statements, because we'll need to qualify to see if you have any down payment. That also helps. And then we'll also need a copy of your driver's license and social security card. And then any kind of additional income that you might have, John, we will need that also, because the more income, the bigger the house.
Right. So many people do have additional income, say child support or, social security. What other additional incomes qualify?
Oh, we can use pension. We can use, like you said, Social Security, disability. We have I actually closed a loan a couple of months ago, and the young lady she had adopted some children. We can use the income from adoption. A lot of people don't realize that, but we can use that income if you've adopted children in the past. We can use that income. And also, if you're having a challenge with qualifying, we can actually use the income from a non-occupying borrower. It can be someone in your family or a friend that may want to help you purchase the home. It's called a non-occupying borrower. We can use that income as well.
Oh, that is awesome. That is awesome to know.
Yes.
What would be your number one advice to buyers who are nervous about interest rates right now?
I would tell them to go out and talk with the lender, get qualified and approved for the home. And then once you determine how much of a home you can buy, you need to go out and find a home that you love and that you want to marry, because the rates, you can date the rates. These rates, they change, they go up and down. There's a lot of options that we can offer you as far as rates. You can go in with a 7 or a 5-year ARM, and then once you're closed and you're home, you're in your home, you purchase your home, it's funded. You can go back and in 6 months, make 6 months of payments on time. We can go back in and complete a streamlined refinance and lower your interest rate. So I really tell borrowers, don't be so concerned about the rate. Be more concerned with how much of a home that you can purchase, and then go out and buy that home, that dream home that you desire or would love to live in. The rates, we have several options for that.
Oh, that's good to hear. I'm sure many in the audience really happy to hear that.
Yeah.
So let's do a quick lightning round of questions. Okay, are you ready?
Okay.
Okay. Can I use gifts of money for down payment?
Yes, you can use gift funds. The gift funds can come from either a mother, a father, or sister or brother. Those gift funds can be gifted to you the day or a couple of days before closing. And we have a nice gift letter that we can send a family member. And then they can wire those gift funds to the closing so we can go to closing.
Very nice. Now, should I pay all of my debt before applying for a loan?
I would advise you not to. I always tell buyers, preparing to buy a home is really important. Preparation is key. If you can do that with looking into your credit score, you can go to myficoscore.com. And then the other process is buying a home is making preparations to either have down payment, saving your money. But you don't need that even, because we have grant programs. Yes.
Now, you and I, Barbara, we've worked together before, and I think we have some stories to tell.
Yes, we do.
And I am very interested in hearing your answer for this one. What is the number one mistake to avoid?
The number one mistake to avoid when buying a house is no huge purchases when you go under
I
contract.
knew you were going to say that.
Please do not, when you go under contract, just sit very still and just wait for the buying process.
Is it not a time to buy a new car?
No, it's not a good time to buy a new car. And it's not a good time to buy furniture. It's not a good time to buy anything. You need to kind of sit still until the whole process is complete, and that we're at the closing table. When we close, you can buy all the cars and the furniture you so desire.
No new lines of credit.
No new lines of credit. No, you need to eliminate that process.
Okay.
Yes.
And then another question came in. What is the best thing I can do to prepare?
Preparing to buy a house, you would need to definitely go to myficoscore.com. Review your credit score, because you knowing then you're prepared to buy a home. When you're familiar or you understand what the process is about being approved or qualified, the expectation, and I like to set a realistic expectation, Stella, because it eliminates a lot of frustration in the beginning of the process. But if you're not prepared, it can cause some frustration. So go to myficoscore.com, review your credit score, look at what your credit score is, and then talk to a lender. If it's 580, 620, 600, then they can look at your credit score and at least have an idea of how to increase it, or tell you what to do or what type of bills to pay off to increase your credit score. And then another important factor is you need to look at your income. You need to evaluate how long have I been working at this job? What kind of income do I have? Am I W-2, 1099? You need to review your income. And then you need to save. If you're looking to buy a home, preparation is so important. Start saving your money. And you can start with as little as 3 or 4, 6 months down the road, start saving $1,000 or a couple $1,000 so that when you go into contract, you at least have some money saved, you have good credit, and you're
580 minimum.
yes, 580 minimum. Yes. But we actually can work with 500, but it's just a little bit of a harder process.
Yes,
Yes.
I'm sure.
Yes.
Wow.
I just want you to know we can get the loan closed for you.
You know, I tell all my customers, if Barbara Martey of Mortgage
Express Solutions. We can get it done.
if she cannot get you a loan, no one can.
Yes, we can get it done.
I tell that to all my clients.
Yes.
That's what Barbara, is able to, to do here in this situation. I love it. I call her the miracle worker for a reason. So
Yes, we can get it done for you.
yes, she's amazing. She's amazing. So now you're about as passionate about mortgage loans as I am about being a realtor.
You're a great real estate agent.
Thank you so much. So what is your favorite part of being a mortgage broker? I know you love to help people, but going a little bit deeper, what's your favorite part about being a mortgage
The
broker?
favorite part about being a mortgage broker is just seeing the face of that person at closing when they really just maybe couldn't believe that they can even buy a home, and just looking at the person's face to see the excitement of home ownership, looking at them when they receive the keys at closing. I love that because that's what it's really all about, being able to obtain the American dream, buying a home, becoming a homeowner. Especially the people that don't think they can qualify. It's really exciting to see that expression on their face.
Yes, I love it. So Barbara, what makes a good loan officer?
Well, what makes a good loan officer is structuring the loan, and any loan can be closed. You just have to figure out how to get it closed. A good loan officer is someone that can think outside of the box, that can figure out how quickly and how we can creatively close this loan. If the client is having a debt to income ratio problem, maybe they're having a problem with down payment assistance or down payment. You can actually creatively solve some problems with the debt to income ratio by adding additional income, maybe lowering their insurance premium. It's so many different solutions that you can look into with thinking outside the box. A lot of times when you have a loan officer, if it doesn't fit in that little equation, which is the box, then they just say, it's decline. But a good loan officer is someone that can quickly think out of the side of the box and that can quickly get the loan closed and structure it so that the loan can be funded.
Creativity is important.
It is. Creativity is important.
You mentioned debt to income ratio.
Debt to income ratio.
DTI, as we call it in the industry. That is so important. Please expound on that.
Okay, your debt to income ratio is your income versus what type of debts you have already before you purchase your home. That front end debt ratio is all of your debts, your credit cards, your student loans, your any type of payments, credit card payments. That's the debt that you have versus the income that you have. Just say you have $6,000 in income and you have $2,000 of student loans and credit card debt. The back end debt ratio is the debts that you have, the credit cards, the student loans, with your new mortgage payment. That's going to be your back end debt ratio. And I always tell buyers, new home buyers, when they they call or come and visit with me, I always say, you can qualify yourself before you even sit down with the lender. You can look at your income, your gross income, and then debit out all of your debts, and then you can look at your potential payment, mortgage payment, and add that in to decide or look at the back end debt ratio to discover what your back end debt ratio is. So it's a really good process.
Okay, fantastic. So much knowledge, and I'm sure that our audience members want to hear more and you get into more detail. So where can they find you to get more information and explain even further everything we've touched on today?
Okay, they can find me on Google at Mortgage Express Solutions. My name is Barbara Martey. You can reach me at 770-334-1299, or you can look up Mortgage Express Solutions. We would love to become your preferred lender.
Well, she's definitely mine. So look forward to working with you more. And thank you again for joining us today.
Thank you for having me. I'm so excited. Thank you.
Thank you so much for watching today's show. And remember to follow our show on this channel by subscribing below. And leave a comment to let me know your best takeaways from today's episode. Please also share this episode with a friend. I love building a community that's always learning, always growing, and always your universe for all things real estate. Until next time, I'm Stella Harris, and I'll see you soon.